Now, with the very nature of the financials for a cannabis cultivation business, there's a lot of upfront costs, and the ROI is significantly later down the road compared to other verticals in the cannabis industry. Now, when you look at any of the financial documents for these cultivation businesses, it's very hard to tell the value. And you look at the P&L especially, it looks like they're always running at a loss. So, in this video, we're going to help you to better understand how to prove the value of your cannabis business, as well as showcase the financials in a way that proves your profitability. Now, if you have any questions about cannabis business financial analysis, then please reach out to us via our website at greengrowthcpas.com or give us a call at 800-674-9050. Let's hop right into the presentation. So today's topic is optimizing your financials to improve the value of your cannabis cultivation business, and this presentation is brought to you by Green Growth CPAs. And before we get started, I need to let you know that the information contained in this presentation is meant for guidance purposes only and not as professional legal or tax advice. And further, it does not give any personalized legal, tax, investment, or any business advice in general. Now with that out of the way, let's review what we're going to cover in this video. So first, I'm going to give you an overview of the cannabis cultivation financials and what makes them very tricky or sometimes hard to understand the profitability of those financials. As well as I'm going to give you a few ways to improve the value of your cultivation business. And then lastly, I'll help you to better understand and present your numbers to your internal or external stakeholders. So first, the overview of cannabis cultivation financials. Now, the nature of cultivation businesses is that they are loaded with tons of upfront costs with no return on that investment until much later when compared to dispensaries or cannabis manufacturing businesses. Cultivation sites have expensive build-outs, $70 to $150 per square foot, and all that cash that operators need to shell out before growing a crop will only return if that crop makes it through the multi-month grow process and passes testing. Now, to build on this, you're always going to be shelling out more cash to either scale up the operation, finance a new crop, or go to another building. And on a cash basis, for your accounting methodology, this looks horrible, especially in those first 18 to 24 months as you're growing and scaling, starting small and getting bigger. Lots of cash going out, being dumped into your cost of goods sold, and compared to your cash coming in, it's a lot of money going out and a little bit of revenue coming in. Now, for a one grow operation or smaller scale business, this can be tolerable, but with multiple grows or larger scale operations, when you look at your P&L, you're going to always be in a loss position. Now, conversely, when you do your accounting on an accrual basis, you'll see you have a positive profit margin to the extent that you're actually positive. This essentially means that you're not going to be putting and stuffing all of your costs directly into cost of goods sold. You're first going to build up inventory and then flush these costs to cost of goods sold with accrual adjustments as your product is sold. And that's not likely something that your $25 an hour bookkeeper knows how to do. Now, we won't cover the difference between cash and accrual accounting, but all you need to know is that the methodologies make your numbers look incredibly different. But at any rate, this is why you need to know a full and accurate cost per pound to show your margins and finally your profitability, no matter what your accounting method is. And this is especially true when you scale up your cannabis cultivation operation. You have to make a choice to put more money into your new grow site or expand the current operation, and you can only make that choice to scale if you have accurate cost per pound numbers as well as their corresponding margins once you sell that product. So now that you understand the basics of cannabis cultivation financials and how they can appear to be pretty lopsided and these businesses sometimes don't appear to be profitable when they are, I want to give you a few ways to improve the value of your cultivation business so that when you present the numbers, there's reasonable methodologies as to why this business is worth this much money. So first, you should be creating and documenting standard operating procedures so when you go to sell this business or even while operating, it is a turnkey operation day after day. Now, I know this sounds very basic and it's like, well, obviously we should be doing this, but yes, it's obvious to do it, but when we go into our engagements for our CFO work, most clients, and that's like 80% of clients, don't have documented and detailed documentation around the operations of their cultivation business. Now, obviously, your business doesn't run itself. There are people behind the curtain, pulling the strings, and making the business move forward. Now, when one of those people leaves or your business gets acquired, you have a huge loss in vital operations information, especially when somebody leaves. Say a master grower leaves, they may take their whole methodology with them, and now you're in a bad position. So the first thing you need to do is document every position's daily tasks from master growers, junior growers, salespeople, warehouse, anybody in the back office, everyone. And there are many excuses as to why this is not getting done or people don't do this. Things like you just need to feel the plant or you just need to see it to make a choice. Well, you need to cut the excuses and document things such as schedules for feeding or grow or whatever that's going to be. Decision trees. So when you look at a plant and you see 3 or 4 different characteristics, what do you do then? It may not be a strict guideline, but at least some kind of color and context to the situation. And document anything else that you can teach the next person. Because when you hire somebody, training is a very costly task that you can't really quantify until you look at the number of hours that it takes to train somebody, and can you shorten that number of hours. For example, if it takes a cultivator, a master cultivator, 8 extra hours a week for the first 4 weeks, they make $100 an hour. That's $3,200 for the whole onboarding process of this junior grower, where maybe you could shrink that down to $1,200, just 12 hours, and other stuff is done through some type of training manual. Now, there are many tools out there for SOP tracking, but in a worst case scenario, just put it in a word processing document. Now, during M&A transactions, there's always a material discount when you buy a business that has undocumented processes because there's no way to repeat your success without you or other critical actors within the business. Now, you may see this as a bargaining chip, like, oh, you can't buy the business without me, but other investors will see this as a huge risk to their investment capital. They may not be able to actually make any money off this investment if they don't know how to grow the cannabis the way that you do. Now, an additional benefit to having these SOPs is that they become your trade secrets and they can generate more revenue or reduce your loss. First, you can license these standard operating procedures out to other growers with joint venture deals and draw in another stream of revenue. Second, they can be used to scale from one grow site to the second to the third as seamlessly and as quickly as possible. When you can hire more people, train them faster, you can get up to scale much faster with these new sites and these new operations. And lastly, if someone calls out or quits, the business can get back on its feet faster because the jobs have been documented and you can drop a new person right in. Now, yes, there may be growing pains, but it's faster than having someone like a master grower, again, teach a junior grower on the spot when it's actually a harvest day and it's like, wow, there's so many things to do. It'd be great if there was a manual that I could let this person learn from for the first 4 hours of their shift, and then I'll teach them the second half of the day, A, B, C, and D tasks. Now, the second way to improve the value of your cultivation business is to implement information tracking systems. Now, this comes up in almost every one of our analysis videos because most businesses, again, 80% or more, do not have the best information tracking systems or even to the granularity needed to make a thoughtful analysis of the business. There's essentially no objective way to measure the financial health and viability of your business if there are no information tracking systems implemented. If you don't know what the inputs are to a specific detail to create those outputs, you have no way to understand, is that output the right output? Are you actually making the right amount of money on that? Are you making the right margin on that? Now, it can seem like a headache or highly unnecessary to implement a robust and granular system at the onset of the business, but it is necessary to assess and improve your profitability. Again, as we said in the beginning of this video, the numbers can look very lopsided. A lot of money going out, not a lot of money coming in. So with these systems, you can prove out that profitability sooner and much earlier. It also creates discipline and accountability for workers at every level in the business, from the person on the floor all the way up to the owners. Now, one of the chief benefits of tracking data as early as possible is that you have historical data to see what the trajectory of your operation is as you optimize it. As the saying goes, you can only manage what you measure, so measure it all and manage it as you see necessary, right? You can't get too deep into the weeds and there's so much information overload. So choose what you actually look at. You should track everything, but choose maybe in quarter 1, we're going to focus on these metrics right here. Quarter 2, we'll add these additional ones in, and maybe you just stick with those for the rest of the year. You choose that, but track everything before you need to actually have the data, so you have the data when you look back historically. Now, the more granular the data, the more insights you can pull from it to make strategic decisions about the business. A very basic example of this is that if you see wages and salaries jump up or bump up 12% from Q1 to Q2, you can dig in to see which roles drove that increase and understand if there were any tracking issues with people's times. Maybe they didn't check out for lunch, or the timing clock system is broken, or this was to be expected because you were prepping for your outdoor grows and we were going to see a 10 to 12 to 15% jump in the amount of hours spent prepping our grow areas. And the systems that you need to implement are around your time tracking, your financials, and your product yield and performance, right? Things like costs, revenue, how many pounds per plant, how many grams per square foot, how much time was spent at each part of the process and by who, because you have a rate per person, things of that nature. When you get all this data, you can start to make some reports from it later. And the last way we're going to talk about to improve the value of your cultivation business is knowing your true cost per pound. Now, you may know this. You may say, hey, I know my true cost per pound. And very few cultivators actually know their true cost per pound by taking into account all necessary expenses of the business. But many people think that they do. And most people look at consolidated or aggregate financials and divide it by the number of pounds that they produced in that time frame, and voila, we're good to go. We know our cost per pound. But that only works, that methodology of aggregate financials divided by the number of pounds, it only works if you only have one grow area and one strain, which is likely not the case for a majority of the operators, which would be 95% of them. You're going to have more than one veg room. You're going to have more than one bloom room. You're going to have more than one strain. So if you do, you cannot look at this aggregate consolidated financials and divide by the number of pounds, because the complications in knowing your true cost per pound reveal themselves when you have mixed grows, like indoor and outdoor grows, or multiple strains, or multiple rooms or grow sites, or a constant harvesting schedule, right? If you're always harvesting every 2 weeks, that will change the cost because costs change over time. Nutrients are not going to always be the same. Water will not always be the same. Labor will not always be the same. So you have to look at these things over time. So let's review a high-level walkthrough for calculating your cost per pound. And this is where your systems are incredibly important, because for every expense that a company has, whether it's nutrients, labor, app subscriptions, marketing, taxes, whatever, it needs to be tracked as granular as possible. You're going to have direct expenses and you're going to have indirect expenses, but you want to put as much information to each expense. Things like the grow type. Is it for indoor or outdoor? Which strain is it going for? Which area or room was this cost assigned to, right? How much electricity is going into one room? Or if it's just an overhead expense. The more detail, the better you can analyze your business, which we'll talk about in a moment. But going into this great detail means you need to have a large and detailed chart of accounts. And we made a video about that, which I'll link to the description below. So essentially the process is going to be, you're going to need to list out all of your expenses, right? So first, those direct expenses. You'll need to allocate these based on the detail, again, of your chart of accounts as described before. Now, when you buy nutrients, you can pretty much tie that back to a specific strain, a room, or an area of the grow. And lab tests, you know which crop you had to test and where that cost needs to be allocated to. These are not very hard. These are expenses that should be easily tied back to a specific plant, strain, an area of your operation, an indoor or an outdoor grow, things of that nature. When I say easily, that's only if the expenses are being tracked as they are made. Going back and cleaning up this information can be very difficult and messy, so try to do this as often as possible. More importantly, just do it as you make the expense. Just a little bit of notes can help your accountant do wonders with allocating your expenses. Now, the more thoughtful analysis comes in with your indirect expenses. So you'll need to develop a reasonable methodology for each of these. Things like payroll costs, wages, payroll tax, health insurance, bonuses, workers' comp, meals, recruiting costs. You can use job codes or project codes to allocate these expenses. It can be as simple as indoor versus outdoor, or it can tie down to the exact step in the grow process. For example, how much time is spent making the land good for the grow? How much is going into the first month of making sure a crop is growing well and the initial steps in that process, all the way to the harvest step? How much time is spent in the harvest step or the trimming step? Be as granular as you want to analyze. Now, other overhead costs can be allocated, such as, mortgage and rent. You can do that based on square footage. Insurance, based on the type of insurance, you probably can base this off the square footage or off the revenue. And other overhead costs such as taxes, sales and marketing, accounting and compliance, and other back office expenses need to have their own methodologies developed. I'm not going to go into detail, right? You can figure those out as you move through the business, but everything needs to have a reasonable methodology because someone is going to ask you, an investor or a superior is going to say, well, how did we get to this cost per pound? You want to show out all the costs that went into it and how you allocated those costs. How is just as important as how much, right? Methodology versus the actual cost. They're both critical. Now, once you have these expense allocations done, you can simply compare these to your number of pounds produced depending on the granularity of your tracking. For example, do you want to compare an overall company price per pound of $428 per pound, or would you like to look at it as outdoor costs $319 and indoor costs $524 per pound? Or would you like to break it down even further, such that indoor OG is $743 per pound, indoor Blue Dream is $629, and indoor Afghan is $561 per pound, and we have the financial records to back all of these details up, right? It is as granular as you want to get it, but the deeper you go with detailing your expenses as to how this expense came in, where is it being allocated to, the deeper you can do your analysis. So now you understand how to improve the value of your cultivation business and put some evidence behind the numbers of your business so you can actually talk intelligently to your internal stakeholders, external stakeholders, potential buyers, and even teams within the company. So now I want to talk about understanding and presenting those numbers because it's very important how you frame up your numbers compared to actually what those numbers are. The picture frame does just as much for the picture as the picture itself. So let's first talk about the importance of margins, right? At a quick guess or glance, it's likely cheaper to create outdoor product compared to indoor product because of no electricity costs and other things of that nature. But what is the margin of the indoor versus the outdoor product? Which leads us to a discussion about the sales price. So for example, if your outdoor flower costs that $319 per pound we talked about, and you can sell it for $650 per pound, then your profit margin is 51%. Now, for your indoor, your cost per pound is, say, $524 per pound, and you can sell it for $1,300 all day. Then your margin is 60%. So you see 900 basis points difference between those two indoor and outdoor grows. Now, yes, the scale of the outdoor may make you more money, but knowing all the margins allows you to manage and control your costs, as well as decide what your next move is going to be. Also, understanding that bumper crops versus prime crops, do they have different margins, or do these margins change by month or by quarter, right? When there's a flood of cannabis in October and November, prices are surely much lower for that outdoor cannabis. But when you get into the thinner months of December, January, February, March, can you sell that outdoor cannabis for a little bit more? Now, a more impactful example of this is two indoor crops, right? One with a margin of 60% and one with a margin of 37%. Which one will you actually allocate more grow space for during the next crop? From a financial perspective, probably the 60% margin crop. And then you'll take into account all the other factors such as consumer demand, yield, things of that nature. But as we said before, it always looks like you're running at a loss or close to zero with these cultivation businesses. So being able to show investors, owners, and potential buyers of the business your margins over time and how they change helps you to truly show the profitability of your business. Every other business in the industry, from manufacturers to retailers, can show their profit margins at a very granular level, down to the product, down to the type of oil, all those different things. So you need to be able to do that same thing, and it's significantly harder for cultivation business due to the nature of the financials that we discussed again earlier in the presentation. Now, the second way to improve the way that you show your numbers is having historical data. It's very important to have historical data to track your progress and show the optimization of your business. And this cannot be overstated. Being able to see lines, which are trends, and not dots, which are just points in time, is incredibly important. People want to see lines, not dots. Stakeholders want to see trends in how costs and revenues are moving within a business. Are they trending up and to the right for revenues and costs are trending sideways or down and to the right? Let's see. Investors and everybody wants to know that. This will allow you to start dialing in your costs and making your business more profitable once you start to see the historical data. It will also reveal how much more you can break down the numbers for analysis. For example, if you see your labor costs are higher month over month, but there are no job codes to actually peel back and see why that's actually happened, then you can actually implement those job codes and see in the future what's causing that change and why in your labor costs. And if you want cannabis to be a mainstream business that everyone can get into or that is valuable and people want to buy and it's a more attractive investment, then you need to track and analyze these numbers. There's no way around it. Corporate big agriculture or big ag does this. They know what side of the field produces more corn or more soy. If it has this kind of tree line next to it, it produces more product. Things of that nature. They will be able to tell a story behind the numbers, and they won't pay big bucks for your fairy tale numbers. They want a fact-based documentary. So if you want to exit from this cannabis cultivation business in the next 12 to 48 months, start tracking your data now so that when you go to sell the business, you have numbers to back up your business valuation. And again, it's a fact-based documentary of the entire business. It's very objective to see that this is a valuable business compared to someone who just grows a lot of cannabis but has no way to prove that it's actually profitable other than more money's coming in than is going out on an aggregate basis. Now, hopefully this video has brought you some value and helped you to understand the financials of cannabis cultivation businesses, how to improve the value of your cultivation business, and how to present the numbers in a powerful, meaningful way. Now, if you need help with analyzing your cannabis cultivation business and the financials around that business, then please reach out to us via our website at greengrowthcpas.com or give us a call at 800-674-9050. We do this work for all of our CFO clients where we're actually the CFO of these businesses, and we help them to better understand the numbers, track them every month so they know what levers to pull up, what levers to pull down, and how to optimize their business, how to report back to investors, how to report to teams below them and say, hey, let's try this or that out, and implement strategic changes within the business. So if you need help with analyzing your cannabis cultivation business financials, then please reach out to us via our website at greengrowthcpas.com or give us a call at 800-674-9050. Have a great day, and we'll talk to you soon.